It's the Profit Answer Man, Rocky Lalvani. If you haven't heard my interview with Mike Michalowicz, check it out. It's episode 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. Our goal here is to learn money mastery without all the complicated accounting mumbo-jumbo using a simple system. 80% of business owners hate accounting. I don't blame them. Your accountant's too busy documenting your transactions and creating a rear-view mirror of what happened. My guess is you don't even look at the reports they sent you. If you're like most business owners, you struggle with this, and it's not your fault. We aren't taught money in school. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Let's face it, without cash flow, you can't pay your employees, buy needed materials, or pay your mortgage and support your family. I help you do that and more so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line. I help my clients make more money. Period. Today, we're going to talk about forward cash flow planning with my friend Lorry Rifkin. Today's topic is a little bit more complicated, but just remember, you don't need to do this. You just need someone in your organization to prepare it for you, and then you can review it. We want you to know what to ask them for. Let's meet Lorry. Welcome to the Profit Answer Man podcast, Lorry Rifkin. It's great to have you join us today.
How you doing today, Rocky? I'm glad to be on here.
I am doing wonderful. Can you just share with the audience a little bit about what you do and how you help businesses?
Yes, I have multiple businesses. I have Accounting Solutions of Wisconsin, where we do bookkeeping and accounting services for smaller clients, probably pre-revenue to $10 million. I have Clarity Management, which helps improve profitability, has interim financial executives or CEOs or COOs available for larger companies. And I have Lunch with Lorry, which is the logo on the background you see on the wall. You can't see it on a podcast, but on a video version you will, where I help people connect and network and hold monthly events where people get to know each other.
And they are awesome events. I've been to one of those, had a lot of fun. I probably have to get to another one soon.
Any of your listeners are welcome to attend. If there's a way afterward, Rocky, you can give them the link. They're all welcome to attend. The next one is November 19th at 11:30 Central Standard Time.
And so what I'll do is I will put a link in the show notes so that people can click on that and find you. So we're here today to talk about cash flow, because in a business, understanding your cash flow and what's happening going forward is essentially, for some people, survival versus a lot of anxiety and frustration, especially if you don't know what's about to happen coming forward. And so being able to see the future creates great insights. You have a 13-week cash flow program that you help your clients with. Can you share a little bit about what that is and why you do it?
Sure, Rocky. The first thing is the 13-week cash flow is graduation to the next level for a smaller business owner. Most of your bookkeepers and accountants in a small business are barely keeping up with the past transactions. The 13-week cash flow is usually the first view into the future that a small business owner has. And really is saying is every week for the next 13 weeks, we're going to be in a cash surplus or we're going to need cash. And what that allows you to do, if you see you're going to be short of cash 6 weeks from now, you could take corrective actions, push around bills, collect your receivables harder, maybe reduce hours. So it's the shift from a past view, which is typical accounting, into a future view, which most owners don't get, but they really need to be successful, especially with COVID.
And that is so true. I think, unfortunately, and we talk about it all the time on the podcast, is all of your financials are a rear view mirror. And you as an entrepreneur are looking forward and trying to go forward. But if you can't see what that future cash flow is, it becomes a struggle. So let's dig into this a little bit. what's the first step that people have to do to create their 13-week plan?
It starts at the top. What do you think your cash collections are going to be from revenue the next 13 weeks? And if you're a business that sells every day for cash, it really is your budget or forecast of sales by day. If you're someone who sells on terms, a sale isn't cash the day you sell, it's when you receive the money. So you make an estimate of when the next 13 weeks your cash from sales and cash from receivables collection is going to come in. That's step number one. The other side of your equation is where you're spending money. So you usually have your payables, which include there could be payables for merchandise you sell, could be payables for rent, could be payables for electricity. And then the other component is usually your payroll. What are you paying people every week? So when you have your cash coming in, your cash going out, and you do it by week, you could see every week we have a positive week, we're generating cash, or a negative week, we need to get some cash.
And so you talked about a couple of different kinds of expenses. Some of those expenses are fixed and you know when they're going to happen. For example, rent is always due pretty much at the same time every month. You know what that number is. It should never be a surprise. Payroll, it depends on your business, right? For most businesses, it's probably fairly fixed. If you happen to be in the type of business where it's variable, there's probably two parts of your payroll. One that's essentially fixed, and then a second part that's variable. So you need to understand that as you go forward to doing that. And you talked about, and this is really important because people don't always realize this, when you sell something, it's not necessarily when you get paid. So as we're sitting here talking about this, if you're the kind of business that has that 60-day window, you essentially could forecast out your next 8-9 weeks of cash flow by looking backwards to see what sales are already in process and when those customers are willing to or should be paying you going forward. Correct?
That's correct. And your starting point is your existing accounts receivable, because that has terms in there and you know when that money should come in. But for example, you have a customer, if your terms are 30 days and you have a big customer that's always paying in 60, you have to manually override the terms when you forecast your cash. That's where a lot of people get caught. They look at, well, the customer is supposed to pay in 30 days, but that customer doesn't, so you have to modify that. And your payables, you have due dates in your system. So the starting point of the cash flow, at least the close 4 weeks in, is relatively easy for most people because you have receivables and payables. Where most people have a harder time is going beyond that. But here's the thing on 13-week cash flows. You start and you get better all over time. I have, in fact, most people who implement it need a template because a small business owner and their bookkeeper and accountant doesn't have time to write a template. I have templates I've used from every single type of customer. And inside there, you list your major vendors. You have a plug for the smaller ones. You list your receivables and cash generated sales. And you have a model then. And every week in our model, we do a simple scorecard. We said we're going to take in this much this week, and actual wasn't there. That scorecard helps us get the model better over time. And it might sound complicated, but I have part-time bookkeepers doing this. The first 2 or 3 weeks, they say, oh, no, we can't do it. And afterward, they say, thank you for the model. Now we could watch our cash and we could plan for periods where we don't have enough money, and we could bank the periods where we have extra money.
You know, it's funny you talk about a scoreboard, right? If you don't know the score, you can't tell if you're winning or losing. And so you've got to have these types of metrics in. And I know this is a little bit more advanced than the basics, but it definitely takes away a lot of the anxiety and fear. Are we going to be able to get a copy of, is there a generic template that we could share?
I have to think about that because giving a template without some basic instructions could be too dangerous. But if your customers want to talk and I could explain to them how to use it, I'd be willing to share it to them because I've shared the template, but I really have to talk to people because if they don't put in the right numbers, then they could have a wrong outcome. One other benefit of a 13-week cash flow, if you're a smaller business owner moving up, your sales are growing, you want to go to the bank and get a new loan, telling your banker and showing them that you do a 13-week cash flow gives additional credibility to you, makes it easier for a bank to want to loan you money. Because if they know you're watching cash every single week, they know you're organized and they put more faith in you. It's an unwritten rule. The companies that have budgets, 13-week cash flows, timely financial statements are easier to finance at a bank and have the first crack at getting approved.
And that's so true. And that's why the Profit First system is so helpful, because the Profit First system shows where all your money is flowing in real time. And the bankers can see, hey, you are profitable. I see how much profit you are taking. I see that you're paying yourself. I see you've got reserves for taxes. I see you've got all of these different things set up. And it's just a much more visceral way of seeing it. And the more you can make yourself look like a real business and behave like a real business, the easier it is for bankers to want to support you and to give you money. And so that's important. Do you think people could create their own spreadsheet, or you said they don't have time? Is that what the bigger problem is?
It's the time to debug it. And most bookkeepers, again, for smaller businesses, and I have a lot of businesses, $500,000 revenue, $1 million revenue, $1.7 million revenue. Those bookkeepers and those businesses are able to maintain a 13-week cash flow after I show them. But if you ask them to build it, their eyes would glaze over and they would have sleepless nights. They're just not going to build it. And after building them for the last 20 years, I have it down where they're pretty simplified. Again, they have a scorecard in there. And it's just a package, and even how you name them, because you should pick either a Saturday or Sunday week ending and name them consistently. I found when I don't use a template and don't give the initial instructions, it becomes a mess.
And that doesn't surprise me. I think that's a big part of it, though. And this is the takeaway for the business owner. This isn't something that you have to do. This is something that you need to instruct your bookkeeper, or it could even be somebody else in the company who can keep track of these types of things. Because I know for a lot of my clients, their bookkeepers are working well in arrears, meaning they close out the past month usually about the second week of the next month. And so they're not going forward looking. And so you need somebody inside your company who is more forward looking, who can present this information to you in an easy to understand system. And that really is what it usually comes down to in business, right? Create systems, put somebody in charge of the system, and then constantly reviewing it and updating it. And it helps for much better sleep at night is what I find.
It really, and actually I make them Christmas trees, and Christmas tree systems are red and green. If the week is green, you have positive cash flow. If the week is red, you don't, and you need to do something about before that week. You bring up one other point, which for small businesses, I'm a champion. I don't care how small of a business, that you do your accounting every day. You don't have month-end closes. Because if you're getting financial statements 2 weeks to 4 weeks after month end, it's too late to do anything about them. That's why in those businesses, it's more important to do a 13-week cash flow, not just for the cash, but because you're doing a review of your accounting, all your receivables, all your payables. You're doing it a little bit at a time every single week. And so there's not a rush to close a statement at the end of the week, end of the month.
And that makes sense. I think most small businesses don't have, I think, that up-to-date kind of systems. They look at their bank balance, right? And that's how they spend. And it's the reality of it. And I think that's why more of them struggle. And that's an important step to make sure you do a better job with that. I know I'm also creating systems as well for my clients so that we'll actually look forward. What are the key performance indicators that are going to drive your sales? So every business has different KPIs, but how do we know that we're doing what we need to do to drive those sales 13 weeks down the road? And then measuring against that, are you doing that every week? And how did your particular week go so that you can adjust in the moment? And so that's definitely important.
And one thing, Rocky, when you implement things like a 13-week cash flow, because I've been an accountant for 40 years, you don't do it and expect perfect results right away. These are evolutionary systems. They improve over time. If I bring a 13-week cash flow to a new customer, I don't expect it to be generating the results I want for 2 or 3 months. It takes time for everybody to get used to it. But what I've seen even in smaller companies, it isn't even the owner has to get involved. I have had bookkeepers talk to the purchasing manager and say, hey, slow down purchasing that week, get it just in time 2 weeks from now. What I find when it's done and people say, oh my God, this gives us visibility into the black hole of the future, I find fellow employees get together with the bookkeepers, even in smaller places, and make better decisions. It's part of the formalization of a small business so they could grow and be a larger business.
And so do you recommend having a weekly meeting with all the parties involved so everybody knows what's going on?
My customers, I do that. And to start that off, we'll do an educational meeting so everybody understands why we're doing this. Because you just have a meeting, you don't tell them the why. It's not as successful as telling them the why. And the why could be, we have to work harder to collect that big receivable, make sure that we shipped it right, make sure that they got the paperwork. So we don't wait till the day before it's due and we call the customer and say, are you going to pay that big bill tomorrow? And they say, what bill? I never got the bill. And I've had that happen and numerous times. So really it gets rid of all that noise. And then when you have a meeting, if you're going to make a big purchase because you're getting a good price, you have to put it on the 13-week cash flow. We're going to buy 4 weeks worth of supplies in one day. That week we need extra cash. I find that it pulls together people and brings them better as a financial team. And I have to say, a lot of times the owner's not involved.
And I think that's what they want to hear. The owner's not involved because most of these guys want to do what they love. They don't want to be accountants. I know you're an accountant. You love doing accounting. Most business owners aren't, and they don't want to do that. See, but you've got to create the systems and processes and put the people in your business who are there to be involved in doing that. And you bring up a great point. And I think when you're making out those large invoices, especially if it's not a normal thing where you're constantly dealing with the same customer over and over again, you really do need to make those phone calls to say, hey, did everything go as expected? Are you happy with the quality? Do you have the invoice? Does the invoice have all the details that you need to appropriately pay? Because every company has a different way of paying invoices. And especially with newer customers, or if you're non-repeatable customers, you need to make sure that they have clarity on how you expect to get paid, and they have the appropriate information to pay you on time. And of course, emails get lost, things in the mail get lost these days with so many companies now shut down and remote. You have to make sure that the right person has the details to get you paid.
In fact, out of doing 13-week cash flows a year, here's a best practice that I found. If you have a new customer, you send your first invoice out, you call them the day after you send it and say, we sent you your first invoice, look it over. If you have any questions, let us know. The payment terms are 30 days. We'll probably be calling you right before then. That came out of me doing 13-week cash flows when I was tired of hearing, we didn't get your invoice. Oh, you didn't tell us the terms were 30 days. Having that process for new customers help that. Even older customers, if they have a bigger ticket item, especially with COVID, you don't know if who you're selling to is this shut down. So you should be in regular relationships with your customers. We sent you an invoice last week. The terms are so-and-so. We're just calling to see everything's okay during COVID. Those processes came out of 13-week cash flows, and I can't tell you how much money they've saved clients of mine.
Oh, and I can totally believe it. And again, I just want to make this clear. The business owner does not need to make the phone calls, but somebody in your organization does. Your terms should be part of your sales process. Like up front, before you even accept the order, your client should know what the expectation is on how you get paid. Because if you're going out, especially if you're dealing with large corporations, and you expect to get paid quickly, some of these large corporations don't pay out for 180 days. And you need to know that you're going to become the bank before you accept that large order. I know we all get excited. Oh, I got this big order. And the sales guy's all excited. I got this big order. But if you can't carry 180 days and that's what that customer expects, Yeah, that big win could be a big loss very, very quickly.
And that's another benefit of the 13-week cash flow. If you have a big order, you have to go buy the materials and pay the labor up front. So if you got a big order, what some of my customers do, even smaller ones, they'll do a what-if cash flow. If I take that order, what is it going to do to my cash? Because you're right, a lot of times those orders don't make you money, or they break the bank, and sometimes they're not worth getting. I can't tell you how many smaller companies were so excited they got a Walmart order, a Costco order, and then they take a big order and realize they don't have the financing in place to do it. But imagine if you had the 13-week cash flow, you modeled it out. You showed the bank we're going to have 4 weeks of negative, then we're going to have positive cash flow. The bank is likely to give you a loan on your receivables because they knew that you took the time to look ahead.
When banks give loans on receivables, how much do they generally charge percentage-wise?
It is a percentage. The first thing that's more worrisome is how much they're going to loan on receivables. The typical number is 80%. So if you have a $10,000 bill, they'll loan you $8,000. The terms for smaller companies could be anywhere from 5% to 20% interest. It depends on their financial condition. It isn't the interest, it's how fast you're turning your receivables, because if you're turning them fast enough and make a good profit, the interest becomes secondary. It's the profit that you generate from the terms that overrides the interest.
But you need to know what your profit is and whether it can cover the interest rate carrying charges, because if it can't, that can become...
I agree. And another sidebar, most of my customers are using QuickBooks. I usually, when I get a new customer, have to redesign the chart of accounts to put the buckets in the right place so you know your true cost. I find a lot of times people don't have the buckets right, and so when they price out stuff and look at their cost, they're not getting a true profitability indicator. And to me, the first level of profitability indicators is gross profit dollars. I really don't care how sales are. I care how much gross profit dollars are increasing.
And that's very true. The top line is irrelevant. The bottom line is what matters the most. And knowing how to do that, that's a big part of what I do with my clients is I dig through their accounting software and I go in and I look at what their sales are, and then I look at what it cost for those sales. So, especially these days, everyone's doing a lot of online stuff. And so adding in the shipping costs, both directions, because shipping ends up becoming a tremendous amount. And then if you're selling on a platform like Amazon, making sure you add in the Amazon fees and everything else and having true clarity on how much it's costing you to sell something and what your actual margins are. And I think that's where people get in trouble. They think they're making revenue and then they wonder, where did it all go? And it's because they didn't do the math behind it. And again, I'm going to say this 1,000 times. You, the business owner, don't have to do this, but somebody does in your organization because it's essentially the most important thing. So, Lorry, what are some of the big mistakes that you see companies do with regards to profitability and cash flow?
The number one is they don't include all the direct costs of a sale to really know if they're making or losing money. An example would be, I have a company that does some design engineering for the products. They sell, they're a smaller company. They had that in general overhead, not as a cost of the product. And yet it was directly attributed to the product. We moved it in there, rebuilt a quoting model, and realized they're underquoting by 20%. So it's having the costs in the right buckets. It's managing your costs once you have them in the right bucket. And the biggest thing I see, the biggest improvement is sort of like the Profit First system. I build KPI generated financial statements. I have benchmarks and leading indicators in all the financial statements I build for companies, so you know you're on track. A sale isn't a sale until it's sold. But if I give quotes, that's a leading indicator. If I know I do 100 quotes, 50% are accepted, and usually takes 4 weeks, I could build a sales model. I can't tell you how many times, and this is where the owner comes in. An owner tells me, oh, we have so much business coming down the pipeline. We issued 100 quotes. A quote isn't a sale. A sale isn't cash. And so having those leading indicators where it's crystal clear for everybody, I found has been tremendous in helping companies make more money.
And everything comes down to math and a numbers game. So you can look at historically how you are. If I put out $100,000 in quotes, there's a good chance that, if you've got a 30% close rate, then you can say, okay, we've got $30,000 coming down the pike. Here's what happens, though, and this is also cool. If all of a sudden you're seeing changes in your percentages, that allows you to ask better questions. So if you're seeing your percentages go up for closing, maybe you've got a new good sales rep, or he's doing something or she's doing something different. At the same point, if your numbers start going down, you can start questioning, hey, is there a problem in our sales process? Has something changed in the world that we weren't aware of? And again, you're doing this now forward-looking instead of looking in the rearview mirror.
Well, Rocky, something along that, because small businesses have a lot of variability. I will not use 1 month variances. I'll use 3 to 12 month rolling averages on all my key classifications. I'll use that on sales, gross profit dollars, admin costs, because I want to see a moving average. And when I shifted to a moving average, it took a lot of noise and anxiety out of the system for owners. 1 month is down 20%, but the moving average is still okay. That happens. Sometimes in small businesses, the bookkeepers don't always book stuff in the right period. And so I've learned to use moving averages to smooth things out, and it really gives you a better KPI of performance.
Cool. Is there anything else that you would like to share today with our listeners?
Yes, I know for many of your listeners, a 13-week cash flow goes, oh, we don't need that. It sounds complicated. But here's what I found. When a small business thinks like a bigger business, they become a bigger business. So if you're an owner happy of your company size now, you don't want to grow, I wouldn't force you to do a 13-week cash flow. But most owners I meet want to increase their profitability, and I would teach and tell them, act like a big business to become a bigger business.
And that's very true. And that's what's cool about Profit First is that we act like a big business in that we take a quarterly profit distribution check. So you're behaving like a real business does, and you should be rewarded for the investments you put into your business. So that's very true. If people would like to learn more, find, and connect with you, what is the best way for them to do that?
The best way is through email. I don't know if you have a way of doing that.
Yep. If you tell me your email, we'll put it in the show notes.
Sure. You want me to tell you now?
Yeah.
LRIFKIN. So the first initial of my first name, Lorry, and then Rifkin, my last name, at Clarity, CLARITY, then MGT.com. So L Rifkin at ClarityManagementMGT.com. And again, I would always talk to one of your listeners, just explain to them. They're also invited to lunch with Lorry, where you can meet 20 other people. It's good, especially if you want to develop relationships in different cities. I'm in Milwaukee. I know Rocky's in Pennsylvania. But the one thing about COVID is it has expanded our geographical presence. So if you have listeners who say, well, Lorry's too far away, in today's world, nobody is too far away to help somebody.
That is true. And that's all just about building relationships and helping each other grow and thrive. And that's what we're here to do today. Thank you so much for joining us.
Thank you, Rocky. It was a pleasure being on your show. I hope it helped your listeners.
I always enjoy having conversations with Lorry. And having clarity on when your money is coming in helps out. It allows you to plan ahead and sleep better at night. Remember, you don't have to do this yourself. Just get somebody in your organization to do it. Remember, profit is not an event. It's a habit. And as always, you don't need more resources. You need to be more resourceful and to focus on the bottom line. That's why we think our way to a solution versus spending our way to a solution. If you want a done-for-you service, you can have me as your Chief Profitability Officer because you have your zone of genius that you want to focus on. I only work with a handful of clients so they get my full attention. Let's get on a right fit call to see if this makes sense for you. No obligation. I usually work with business owners who have or are growing to $500,000 to $5 million in revenue. There's a scheduling link in the show notes to get on my calendar. Let's just chat and see if I can help you. If the worst that happens is I'll at least give you a quick review of how you're doing. If you want to learn about living a life of your dreams, check out my other podcast, Richer Soul. Let's close out with the mantra. Revenue is vanity, profit is sanity, and cash is king. Let's thrive and grow. Have a profitable week.